Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello, everyone. Welcome to this segment of Travillian Next. We're going to be featuring some special guests today. My name is Patrick Cooney. I'm the GRC lead search consultant here with Travillian's banking and fintech practice. And I am joined by my colleague, Indra Elangovan, our head of strategic advisory. And Indra was instrumental in setting up our guest today, and that would be Konrad and Michele Alt, both co-founders of the Klaros group. And I'm going to turn this over to both Konrad and Michele to do a little bit of an introduction on themselves, their business, and why we're coming together today for the different topics in our world of compliance, regulatory risk, in banking and fintech. So I'll turn it over and introduce both Konrad and Michele. Thank you so much for joining us today.
Our pleasure.
It's really great to be with you, and thanks so much for having us. So I'll talk a little bit about Klaros, and then maybe we can talk about ourselves for a second. So we have launched Klaros now almost 4.5 years ago, and we were the founders. There are 5 partners, 4 co-founders. Yeah, I think we are all very interested in hard problems. We've all been working in financial services a long time. We all have a mix of both public and private sector experiences. And we were looking around for an interesting place to launch a business where we could all work together and do the kind of work that we love. And the intersection of banking and fintech really stood out as a place that had generated a lot of interesting problems over the course of our careers and seemed likely to generate a lot of interesting problems going forward. And we thought, that would be a really interesting place for a small group of people to dig in and build a practice. And so for 4.5 years, we've really been focused on these partnerships between banks and fintechs. How do you choose them? How do you make them work? How do you fix them when they're broken? And that's really almost all of what we do at Klaros. We work on these partnerships from both a kind of a proactive and a reactive standpoint. So we've got clients that are trying to figure out how to build a partnership that works. And so maybe they come to us, maybe it's a community bank that is wondering, how do I get into offering banking as a service? And we can work with them to help build risk management and compliance and, really bring in a pretty contemporary understanding of what the regulators are looking for. And that's kind of a moving target. So we pay a lot of attention to that. But we've offered that kind of guidance to a number of bank clients. We also have banks that have already gotten into this space, and maybe they're struggling now because the regulators are bearing down and they've had a difficult exam or an enforcement action. And we will work with them. How do you get right with your regulator? What do you need to do to strengthen your risk management and compliance? Where is this regulatory trajectory going? How do you anticipate it and get ahead of the curve? A lot of that work is, focused heavily on the boards who are challenged to oversee what's going on with these banks that they're responsible for. And we also work with the fintechs. This is a time when a lot of fintechs are keenly aware that standards for risk management are escalating throughout the world of banking as a service, throughout the fintech sector, as a result of this regulatory pressure. And so they know they've got to upgrade. They know they've got to figure out how to be more robust. And we help a lot of them with those kinds of questions and those sorts of challenges. So that's a kind of an overview of our practice as a whole. Maybe you want to talk a little bit about your background?
What I do, particularly with our fintech clients, is help them think through their options for entering the banking system. And that includes the development of business and regulatory strategies, the development of regulatory business plans and applications for entering banking either as a de novo bank or through the acquisition of a bank. And that is my focus. In short, some of my partners call me the regulatory whisperer, and that's what I do here.
I think that's fantastic that you're able to partner together. Both of your roots, your backgrounds in the legal realm, in regulation, in banking, in consulting, with the different governing bodies, the background with the OCC. I mean, you couldn't have a more perfect pair to get together and create the group that you did in Klaros, along with your other partners. So I know that both Indra and I'll allow Indra to introduce how we've gotten to know each other in just a moment. We've enjoyed all of our conversations with you. It's very much in line with our focus here at Travillian. As we do executive search in both the investment banking realm And then my team, the community banking and fintech team that I support as the GRC lead, it flows very well. We've seen those consistencies in compliance-related search activity really spiking in our realm. Last year alone, we saw well over a 50% spike in the GRC-based searches that we've taken on, and we've had a lot of fun doing them. And we know that it's progressively helping both our traditional banks and our BaaS bank clients and a few fintechs that we work with as well.
Thanks, Patrick. I was looking to establish a connection with an advisory and regulatory consultant whose focus aligns with our board advisory work and executive leadership recruitment. And that's when I saw Klaros Group and Konrad caught my attention as they demonstrate a clear parallel to our areas of expertise, and their knowledge and passion for client service stood out to me. I'm very excited about our collaborative opportunities, and with that, I will turn it over to Konrad to share his thoughts.
But I remember, Indra, when you reached out, it was several months ago now, and being struck during our initial conversation, and later you brought Patrick and Brian in on the conversation, and throughout our discussions, it was very clear to me that we really are serving very similar clientele, all dealing with same issues but different pieces of them. And there really was quite a lot of commonality there in terms of the issues we were perceiving and the solutions we were perceiving and the ways in which we serve our clients. So it's been a terrific relationship so far. I've enjoyed getting to know you and your firm, and I'm looking forward to a lot of collaboration going forward.
I thought it might make sense to kind of talk about some of your activity in 2023, both Konrad and Michele. Any successes, any trends that you saw, anything that you would want to highlight that our audience would definitely be interested in. We can touch on how that kind of parallels with our search activity and our space here at Travillian.
So one thing, and you already touched on this, like SVB was seismic, right? It sent shockwaves throughout the fintech industry in particular. Made a lot of fintechs much more sensitive to where do they have their accounts and what are the risks associated with that. So that was a very large event. It was a big deal for us. I'll never forget that weekend right before SVB was closed. We both spent a lot of time that weekend talking to fintechs that were very worried about
their money.
Companies
Sure.
that were looking, right into the teeth of an existential crisis. It was a very, very dramatic weekend. And, the decision by the FDIC to say that SVB was systemically important was surprising. I don't think anybody had really thought of SVB as being in that league before that weekend. But I think when the FDIC looked at what the possible consequences were, they maybe saw a different kind of systemic importance than had been contemplated before, and it was a really momentous event for the fintech industry, also a momentous event in the history of financial regulation. So that was a big deal for us, and my partners and I spent a lot of time, not just that weekend, but in weeks afterwards, talking to clients, potential clients, members of the media, helping them try to understand, what just happened there, what does it mean for us, and I think we're still seeing the repercussions of that. So that's one event I would single out. Another one that I think really kicked off a series of events, but the enforcement action against Cross River was a public event. It was the first of several significant enforcement actions against BaaS banks in 2023. But I think it was sort of a shot across the bow to the entire sector. Regulators are bearing down on this. You better pay attention. And it certainly has had a big impact on me. I mean, I've done a lot of enforcement action compliance, in the past, working with large banks, but my practice at Klaros has really been reignited, particularly over the last year. We were doing some of it even before, but we're now seeing lots and lots of BaaS banks dealing with enforcement issues, and the experience that I and my partners have in that area has really been called on repeatedly, and I think that was a big deal in 2023. I think it's going to continue to be a big deal in 2024.
I would describe 2023 as sort of a regulatory dumpster fire. We had we had SVB, but we had the other S bank failures. That's a lot of failure in a short time. And the thing to understand about failures is those are regulatory embarrassments. And adding to that embarrassment was the suspicion engendered on the part of the regulators with the FTX meltdown. And I would say, and I would say that the combination of embarrassment and suspicion on the part of the regulators has made for a very challenging environment for fintech seeking to engage through banking with Washington, and absolutely highlights, as does the Cross River enforcement action, absolutely highlights the criticality of risk management and risk management talent at the banks and the fintechs with which we work. I think there's maybe a developing success story here.
Okay.
And we'll see how it plays out in 2024. And I'm certainly interested to hear, Patrick and Indra, your views here. But one of the difficult things for any organization is deciding to spend money on non-revenue generating functions like risk management. I think that fintech and banking in the wake of 2023 are beginning to see risk management as a market opportunity. The ability to distinguish your business as one that will not create problems for your banking or fintech partners or for the regulators is a distinguishing feature right now for those businesses. And I think the success story that I hope we are seeing develop is a commitment to really putting in place the people and the risk management infrastructure to succeed going forward.
Yeah, I think that's really well said. And
thank you, darling. Every once in a while, like monkeys with typewriters.
But when you look at the fintech sector and the portion of the banking industry that supports it, by and large, you are looking at companies that they're doing their best, but they aren't mature at risk management in the way that you would see at a really large mainstream financial institution. And yet, in many cases, they're taking on quite a lot of risk. The operational complexity of a big payments business is significant, right? And so I think, and the fact that they've had risk has sometimes been problematic, right? There we've seen occasionally fintechs fail and leave consumers in the lurch. We obviously saw some banks fail. The push right now to upgrade risk management throughout the fintech sector, including the banks that support it, is painful, right? And it takes a lot of work for both the fintechs and the banks to get from here to there. But when we get there, right, that's going to be a better world for our consumers, for businesses, for everybody that works with fintechs. We're headed toward a more stable and safer financial environment.
I say this with reluctance, but that was really well said too. But Patrick, I think at the beginning you said you'd seen a 50% increase in GRC recruitment. Am I recalling that correctly?
Yeah, I would say close to that or above.
Wow.
It's really kind of ties right into what you shared just before, Michele, about almost the lack of investment into those non-revenue generating kind of roles or business lines or functionalities. That certainly shifted after March for sure. I would say I was probably working on a higher percentage of those revenue generating, talent positions here. I would say product-based positions, payments, finance, lending roles within our banks, both traditional and our BaaS banks and our tech-forward banks. But that started to shift, heavily after March. We started to see a much bigger uptick in outreach regarding general compliance within banking, compliance and BSA officer within BaaS divisions, different audit functionalities, chief risk, of course, that was a big component. The risk was a giant factor. If any positivities come from the experience, I think most of the entities that we work with here have kind of come around, hey, that cost up front for that, that talent individual that's going to prevent something like this from either blowing up or exposing or growing out of control. We've seen that flux, in the right direction. And there should be a balance. I mean, there needs to be the ability to create revenue and to grow assets. But at the same time, you need to have those protective measures in place too. So really a solid blend of those two functionalities is what we've seen emerging. My thoughts are that's best. I mean, for almost really any industry, that's going to be critical. But we've seen that really collaborate very much in line with what you're seeing and what you just shared and suggested, both Michele and Konrad. So hopefully we're moving in the right direction. You never want to have to go through those experiences, but they inevitably do happen. And it's how do you learn, how do you grow and become better from those situations and those experiences.
Yeah, I totally agree, Patrick. And if that was, an account of 2023, I think you can look forward to more of the same in 2024. I think our view, I think I can speak for all the partners at Klaros, if you want to be a survivor in this environment, as whether you're a fintech or a bank that partners with fintechs, you simply have to anticipate that your risk and compliance and corporate governance, of the future is going to be significantly more robust than what it is in the present. I don't care whether you're in great regulatory shape or in terrible regulatory shape, everybody needs to upgrade. And the companies that don't are going to get left behind, if not put out of business. There is no alternative right now, and there's no place for a bank or a fintech to hide from that. It's really a universal phenomenon. So I think you're going to have a lot of work to do, and we see it in our practice too. I think already 3 times this week, and it's only Wednesday, I've had clients come to me saying, can you help us put together a PD for a senior risk officer? It's a BSA officer here and a chief risk officer there and a chief compliance officer. Like people are investing, they're recognizing the need. You're seeing it in your practice. We're seeing it in our practice. It's a big deal.
Look, the history of banking is crisis to opportunity. I mean, Konrad and I regrettably are old enough that we've been through a number of major crises. And, banks, fintechs, supportive services like ours should never let a good crisis go to waste. Figure out what the lessons are of the most recent crisis and learn from them and use that as your starting point for success.
Patrick, you talked about your experience with, sort of searches for risk officers. So I'm curious, Indra, I know you practice a lot with bank boards in particular. Like, are you seeing the same effects in your practice?
I think looking at regulatory scrutiny and awareness, what I'm seeing is boards are more interested because of the unexpected events in the past year. They are seeking out more regulatory, information, changes, and I think taking their training to a next level. I think the plain vanilla does not work anymore. So, I'm not sure if you are aware of board talent gap is obviously there throughout data analysis. It's clear evident that talent gaps are there, lacking regulatory expertise, IT, cybersecurity. I think they just are in need of that sort of guidance.
Mm-hmm. Yeah,
Great point.
I did an analysis just a week or two ago where I went through all of the formal enforcement actions that have been brought against BaaS banks in the last year, looking to see what are the issues being raised in these orders. And by far the most common issue was board governance. And I will say that was a little bit of a surprise to me. I would have guessed something different, but when I thought about it, it made perfect sense. And when I think about the clients that we're working with, it's an area that they really struggle with. There are a lot of really well-intentioned boards out there, but many of the banks in this space kind of got into it opportunistically. They didn't necessarily think strategically about what does this mean for the skill sets that we need on our boards, and they're feeling that deficit now. I think you're going to have a good year in 2024. I think there's going to be a lot of growth in this area.
Yes, so I would add that, in a transformative period, I think the affirmative board is no longer the notion, right? It's like how strategic you are in terms of how you fill your board seats through a structural board composition succession planning, I think works today. So that boards can come in and ask the right question. Oversight role is dynamically evolving, so the demands are greater. Yeah.
Absolutely.
When you work with the boards of BaaS banks, are you seeing a lot of demand for board members with a background in banking as a service?
I think that awareness is there, but I think there's still the sort of like the largest shareholders being the board members. And I think not having a clear succession planning or term limits, mandatory retirement age. I think there's a lot of shifts that need to be seen at this point. But I think there's more awareness from a regulatory scrutiny awareness. So I think that will definitely shake out things. And I think that's our outlook at least. There'll be more need for that talent.
Mm-hmm. That makes perfect sense.
So just, like Michelle said, every challenge presents an opportunity, right? From the lessons learned. So looking at regulatory scrutiny and awareness, there is a heightened interest in regulatory expectations among board members, and board governance role has changed and the personal liability that comes with it. So as boards are actively seeking information on regulatory changes and how they can actually align with those expectations. What are your observations from your work that you do with clients, and what are boards most highly focused on right now?
Well, the boards we work with are probably in some respects not a representative subset, because they tend to be institutions in crisis. So, I want to acknowledge there are a lot of boards out there that aren't dealing with enforcement, and we're by and large not working with them. But the boards we work with, I think when you are a member of a board and you get under an enforcement action, the fundamental question that seems to come up over and over again, and I saw this, in my practice way back at Promontory too, is the board wants to know, are we being singled out, or is this happening to everybody? Mm. And in what respect, if we're being singled out, like why, how? And when you see an enforcement situation, one of the first things that happens, and it happens necessarily, it happens because of the responsibilities of a board member, is trust in management takes a big hit, right? You're a board member, but this bank has gotten into trouble somehow, and management has been running it. And now they're telling you they're fixing it, but they told you it was fine before, right? And so you've got this issue. How do you overcome this trust gap? And even within the board, you can often see trust issues. We've had a director who, that was supposed to be our, legal and regulatory person, right? And he or she obviously dropped a stitch, wasn't telling the rest of the directors, hey, be careful about this. And then you have trust issues between the institution as a whole, management and the board combined, vis-a-vis the regulator, right? There's nothing clearer about an enforcement action than that the regulators have lost trust in the institution, right? They are literally requiring it to do certain things because they don't trust it to do those things on its own. That's what an enforcement action means. And so, those trust issues are really at the center of a lot of the work that we do with them, and that others do as well. And, the work of an independent consultant often is fundamentally about creating a framework in which trust can be rebuilt. So we come in and we help the board get comfortable that, management really is doing the right things. It's not just them telling you so. We know a lot about this space. We've been paying a lot of attention. We think they're doing the right things, or we think they're doing the right things except for this and this. But even when you have some criticism, people all kind of know what's what, and it helps everybody kind of settle down and focus on getting the remedial work done and understanding where trust is warranted and where they have to be a little bit more careful. And it works the same way at the regulatory level. If you can show the regulators, we've brought in an independent firm to help us understand exactly where we are. We've got an extra source of authority in the mix. We're not just depending on the same old people for the same old information. That can be very helpful. It can be a source of comfort to the regulators as well. But trust issues, that's the name of the game in our space and working with boards.
If I could kind of pick up on trust a little bit, and I'm very curious, Patrick and Indra, your thoughts here. I work a lot with, as I said, with fintechs and banks that, and particularly fintechs that do not have boards that look like the regulators with whom they engage. It's very common, for example, in the fintech space to have a board that's all male when the regulatory agencies are very diverse and have women in very highly placed positions. And I do not hesitate to call that out with my fintech clients. And I say, you're going in to the regulators, be prepared for what the other side of the table looks like. And when you say things like your product is inclusive or you're committed to a broad range of consumers and interests, how does that look? And what I frequently hear is something that I have no patience for, which is, yeah, we'd love to have more women. They're just hard to find. To which I always say, I think we're 51% of the population. We are here. I work routinely with exceptionally talented women, many of whom are graduates of regulatory agencies, would be an excellent voice on the regulatory strategy that is often lacking on these boards. And so I really encourage my clients to take a hard look at themselves.
She's
well
fierce.
said.
This is probably the first time she's let me be on a panel with her.
Yeah. Well, actually, I don't usually talk about diversity. I try to represent in my panels, and I often put together all female and diverse boards. But the thing that I really want to take away is not a message of hectoring or nagging. It's to say it is good business strategy. If you want to win friends and influence people at the regulators, look like the regulators.
Michele, I believe you were just recently recognized as one of the top 50 fintech women in fintech, and congratulations. That's a great honor.
Thank you.
I know my team here, very excited.
It was an incredible honor from the American Banker to be named one of the most influential women in fintech. My fellow honorees are an incredibly impressive bunch, and it was an honor to be recognized in their company.
And as we're getting, a little bit right here towards the tail end of our conversation, I'd like to leave with some positive notes. Maybe Konrad and Michele could share a little bit about what's the best way to get in touch with them if they are seeking their expertise, their services. Please share that. I'm sure there's a lot of interested parties after listening to this discussion.
So getting in touch with us could not be simpler. So, I'm Konrad with a K at klarosgroup.com. And this, you are?
I'm Michele with one L at klarosgroup.com.
And if you can't remember that, you can just write to hello@klarosgroup.com.
And you can find us on LinkedIn. Probably more often than you'd like.
Konrad has been dominating my feed in all the right ways, and we're lucky. We're lucky to be a part of it. So that's awesome. You need to be connected there. That's pivotal. Fantastic. Well, again, I'll say it one last time. Indra, thank you so much for setting this up and establishing our relationship. A couple of months back, and Michele, Konrad, it was a pleasure getting to talk with you. I'm sure that there will be future conversations in the past, and for anybody that tuned in, they had to take away some meaningful concepts to consider if they're going back to their teams, their boards, etc., of what to consider, going into 2024, deeper into 2024. So with that, I wish you the best of quarter one, a wonderful new year ahead of us. And if you have any questions, if anybody here that's tuning in has questions, comments, insight, please reach out to us here at Travillian. Reach out to Konrad and Michele at Klaros, and we'll be happy to have that discussion with you all. Have a great day, everybody.
Thank you for the opportunity. It was a pleasure.
Thanks very much.
Thank you.